All right. Hello, everybody, to our daily COVID-19 update, where me and these fine accountants provide you an update regarding the PPP loan, the SBA loans, the CARES Act, all the other acronyms that are new to us and the world, in the business world. And I'm Michael with Reconcile. We have Dan here with Ignite Spot, Amy Walker, CPA, as well as Jacob Schroeder with Ascent Consulting. One day I'll get that correct, Jacob.
One day.
Regardless. So Amy's going to take the lead with us on today's conversation, including how do you actually calculate the PPP loan total?
All right, gentlemen, first of all, I missed you this weekend. I know y'all had a great time, but I missed talking live with you. Not that we weren't still talking, slacking, whatever. And we don't know where Chris Maxey is at the moment, but hopefully he'll be jumping on soon.
Hopefully he's okay, and PPP hasn't drove him to the brink or anything.
He probably just drove into the liquor store. He's probably just given up and said, I'm going to go back to being a chef.
Yeah.
Yeah. The theme for today, if any of you are Wicked fans, the song that's going to pop up in your head, no good deed goes unpunished. For 2 weeks, in the spirit of wanting to help our clients, many of us have been trying to figure out how to stay ahead of these applications and be ready when it was time that the banks opened their portals. Because we just knew what was going to happen, and it did. I mean, clients they're worried. They've been reaching out to us for help. And we all did the best we could, but the rules were changing every day. But then come end of last week, it seemed like it was more like every few hours. And now over the weekend, it just seems like literally somebody can say one thing and then somebody said, well, here I've got a basis to think something else. So try as we may. This has been a very interesting last 4 days. So we thought today we would just tell you where we are real world, in real life, how we're helping our clients, what we're seeing from different banks, and just kind of bounce off each other from there. So I'll ask you guys first, you heard of anybody who has actually submitted not just an interest form, an application?
So our local bank has submitted, and we have SBA loan numbers. So we've actually submitted and got SBA loan numbers. That being said, the banks themselves can't fund these because the SBA has not defined the closing process for the loan. So while we have the loan number, the loan is not closed, which means there is no fund distribution out. So yay, we got an SBA loan number, but what does that actually mean?
Hopefully it means the money is guaranteed, right?
Yeah,
I mean, fingers crossed it means.
Yeah, theoretically money is now allocated to us out of the 350 billion pool. We have ours allocated to us. We just have no idea how to get it.
That's gotta mean that, because that's the only way I could imagine they're able to calculate these numbers that they're sharing online, unless they're absolutely lying, which is what people want to believe. That they're lying, right, and maybe totaling application totals plus what's been promised plus what's been given. But either way, it's been a lot of money that's been asked for, probably north of 20 billion. We've heard different numbers, north of 20 billion. Let's say it's even 50 billion by the end of today. That still leaves 300 billion left, right, to be requested.
Yeah. I was reading something just a few minutes ago. It was talking about just certain banks and where they're at, and we're finding some banks are putting thresholds on what they're willing to borrow against it or claim as part of their right to it. We all know Wells Fargo has been kind of the odd man out in their process, slow to get on the bandwagon, slow to kind of maneuver through things, but also they put a cap. Just said flat out, we're only going to go to 10 billion and we're done. We're not going to go anywhere beyond that. And so I have a handful of clients that are really frustrated with that. They've had some concerted relationship or long-term relationship with Wells Fargo, have had some, really good strategic functionality that's worked for their organizations, and feeling left out right now is a really difficult situation for them, because now they're left to find a fintech or some other bank that's accepting or offering loans to businesses who aren't members of their organization. And so I think that adds a lot of frustration to clients right now. I think the other piece with it too, with these promises of money and the timing of everything, having follow-up conversations with clients today saying, we don't think we can wait another week for money to come in. So what are our options now? And if I lay off or furlough or whatever it is to my employees, can I still get PPP money or not? And where does that leave me from that standpoint? So lots of difficult conversations out there right now for our clients, trying to figure out what's best to do. I've yet to see one of my clients get all the way through. At least I haven't heard from any of them. Lots of clients, applications gone out. We had a few that got phone calls on 10 o'clock on Saturday night, 10:30 saying, hey, we're going to send you a link. We're going to email this to you. Fill it out and get it back to us. Tomorrow, you'll be able to submit documentation. Still no follow-up email on Sunday. No even follow-up emails today, outside of it. Expectation was hopefully they'd be able to maneuver through it, but we're still left waiting for tomorrow, hoping that there's another day or another process we can get moving through.
And I will say the bank that we worked with, I talked on Friday that a lot of these banks are using a middle software to get to the SBA, right? They're using a middleware in there. I talked to the bank today, and that middleware is actually not ready. So they skipped that process and we're manually entering directly into the SBA, which obviously makes this what likely is a much more time-consuming and manual process than otherwise it would be, which means volume is going to slow down, right? If that's the case. So I think the lending caps and seeing some of the lenders really slow down, especially the top 10 SBA lenders in the US that are typically out there, having slowed down, speaks a lot, right? And says this money's not going to disappear as fast as a lot of people think, just because these people are going to slow down. But I'm also going to say it also means if they're slowing down, you may have a lot better luck with a local bank, right? It's time to go build that relationship that many of us have neglected over the years.
Well, and I'll add a comment. We know on Friday, Hector Garcia was very adamant to be very clear that local banks are good options. We had a lot of reach out, I think, from a few people on my side, from businesses as well as people I connect with, and they just kind of had to laugh at that because, much to Jacob's comment, there are some people who have really good relationships or local banks from that standpoint that have really great features. I know, Amy, you talked about or Slacked over the weekend that you've had some really good contact with your local banks as well, trying to figure out alternatives and options, which is great. I mean, that puts you way further ahead, especially if you know someone to talk to, not the third vice president of sanitation engineering or just paper processing at Wells Fargo like everybody is there. So
yeah, they're all vice presidents, right? They're all vice presidents.
Well, I can remember when we were younger and just first going out after college, my father-in-law said, you need to know your banker. We have an ATM card. We don't need to know our banker, right? But all of those old things, keep 6 months of cash reserve, know your banker, all of those are coming back around again, aren't they? My bigger clients that, of course, maybe have some debt with some bigger banks, have been in business for many years, their bankers reached out to them, even from the big box banks, just to reassure them there was no early access because there is no portal yet or anything, but just reassuring them that this is what you need to get together. The same kind of list that we've been going around. But I think something that's kind of ironic, switching now more over to the calculation, for any of the accountants that are listening. Okay, so that sucker and its requirements have jumped all over the place, what to include, what not to include. And there were many of us who, I mean, most of us as accountants find peace in the numbers. And so that's how we feel like we're in control. We got in there and we were trying to get some calculations done to be ready. Just throw it out the window, light it on fire. I mean, what I learned in all of this is that the banks will tell you what to input into their form.
Mm-hmm.
I filled out 3 spreadsheets with 3 different clients this morning. We sat together, they dropped their numbers in, they asked for them in all different ways. So no matter what kind of calculator I put ahead of time, I just had to go get the payroll report. And that's where you pull the numbers from. The bank is going to tell you what they want.
Yeah, that makes complete sense. And because their banks are figuring out what are they going to accept, right? What are they willing to underwrite and approve? And so just to be clear, it's this elusive term payroll costs, which is what we're supposed to be calculating, which we've been helping our clients calculate, which our clients have calculated on their own, mostly unsuccessfully, and are relying on their payroll providers to get information from. So if you are needing to get your payroll costs together and you're with a major payroll provider, the majority of them have created a special report to calculate this, but it may or may not be correct based on what your bank wants. So the best thing you can do for those of you watching is to go to your payroll provider, get the 941s, get the 2019 total payroll reports. And if your bank wants it, the draft 941 form, which some payroll providers quickly put up, the draft 941 for the first quarter of 2020. And some banks are asking for rolling payroll, rolling past 12 months, or January, February of 2020 payroll. If that was the first 2 months you had, or if you didn't have payroll before June of 2019. So as Amy said, asking your bank for that clarity is really important, and not just trying to fill out that form yourself without getting that specific guidance list from your bank is going to be really important. I think that what we're probably seeing, to Jacob's point about banks capping right now, is all the major banks have focused primarily on their own customers that had lending relationships and or deposit relationships. It's almost as a way to make sure those customers were going to stay afloat so that they could pay those debts to those banks still. And so it seems like that's the play for many of the major banks, and not many, there's a minority, but not many taking on actually new customers in this process. And it seems like there's going to be okay, we've got this, let's get them all through the SBA process. Let's make sure they get their SBA number, they get their money. And then let's see how our balance sheets look now as a bank. Let's see if we've gone over any of the guidance or any of the guidelines that we're supposed to as a bank. Let's make sure that we've not done any fraud, and then let's get through all the independent contractors, the self-employed, all those people that's coming up this Friday. So it seems like this, like, do it, wait, and then the SBA is backlogged anyways, as we talked about. They can only do so much per day in their current system that they're updating their system. So, and then we got banks that still aren't up to date. They're still waiting to get their own systems and internal procedures up. So really need to get clarity from your bank is going to be really important.
Has anybody seen rolling 12 months versus calendar year? I've seen nothing but calendar year on an actual application. Unless you're a seasonal business.
I'm seeing calendar year from all of our banks.
Yeah.
I had one client who had a rolling 12 months. And and I think this plays into it a little bit with the thought process as well, is they had a really kind of unique calculation for their bank as well. So they did a rolling 12 months. They had some deductions and things like that were for employees that were over $100,000. So it almost seemed like in some instances like they were backing out certain portions of potential taxes or things from that standpoint as a part of their calculation piece. It didn't make materially a whole lot of sense to me, but with the bank has choice, right, on how they want to accept it, what they're comfortable with their thresholds being. And I think that's the part that's hard with it too, is there's no promise or guarantee on which ones are going to be the most you can borrow, right? I mean, we wish that there was, this, everybody has the equal amount, a process and percentage, but the reality is there's some people that you could go to one bank and get one number and go to another bank and get another different amount and loaning piece. And so the hope is that there's at least enough for people to get that covers their core needs and where they're at right now, and maneuver from there from that standpoint.
There's been clarification for those of you who applied for the disaster loan and asked for the emergency economic injury grant, the EEIG, which is the first time I've actually heard that acronym for this, but the EEIG, it's the $10,000 advance or up to $10,000 advance. I got an email from the Vermont SBDC today providing clarity on how does somebody qualify for the grant and what stipulations that they make around it. So it says, we know that the EEIG is figured on the calculation of $1,000 per employee up to 10 employees. That's the first time I'd ever heard that. I hadn't read that anywhere or heard that. So if you didn't have employees and you requested the grant or the advance, this is implying that you may not get any. And then we have not been given guidance on whether sole proprietors or LLC owners who take owner's draws are considered in this calculation. Once we receive that clarity, we will share it with you. So that was really interesting guidance of how do they determine that $10,000 advance.
Michael, do they say anything in there on like rental losses? Because I know there's a rental loss line on that application as well.
Yeah,
so I wonder if those are eligible for an advance or not.
Yeah, they don't say anything regarding rental losses as it pertains to the grants. They do say it as pertains to the disaster loan, but not the grants itself. And then, and according to the SBA, the advance does not have to be paid under any circumstance. If you proceed with the loan, the advance will be deducted from the total amount available to you. So you got the grant, which was in advance. If you proceed with the disaster loan that the SBA will offer you to take, and you decide to take it, then they will reduce it by the grant amount. If you decide not to take the loan, you may keep the advance. So that's clarity too. If they offer you the loan and you say, no, I don't need it anymore, I don't want it, then you can actually deny it and keep the $10,000. So very interesting approach to this. It's tied to number of employees, no clarity on if it has anything to do with rent deduction or any other kind of loss besides employees. So again, it was in the minds of the crafters of this tied to payroll and keeping people on payroll as long as possible.
So today was the first time I'd read that too, and I had that from a different source. And I just wonder if that's a small detail they forgot to mention, because that's a biggie. How many people have applied for that thinking next week they're going to have 10 grand in their account? Which leads me to another thought. How many business owners are going to apply for this PPP and aren't going to qualify for it? I mean, there's going to be some hard. I mean, I don't envy the bankers, is what I'm saying. I mean,
Right.
If you think we've had a hard couple of weeks, I
Yeah.
don't envy the bankers.
I'll say my banker today, when I talked to her, she's like, I'll take Friday, Saturday, and Sunday combined any day again over today. And I had warned them Friday morning. I'm like, we've been feeling it the last week. Now it all comes into focus on you. And worse even, because all those people that don't have an accountant and want to give you some handwritten slip and expect you to kick them money out today, and they expect to walk out with a check today based on the media, have fun dealing with them. And it's, I think, been pretty brutal on your bankers. So small business owners, accountants, be thankful for your bankers if you get a good attitude when you call. If you get a bad one, thank them anyways.
And actually I called my banker today. I actually hadn't called her at all after the CARES Act. I did not call her on purpose, and I just sent her emails. And then today I called her 4 p.m. Eastern and just checked in to see how she was doing, asked her how she was doing personally first, how things were going back, in her city. and just, made sure that she got information from for my firm, but also for any clients that we're working with. And if she needed anything, if she needed any support, and also offered to say, if you have clients that can't get this stuff together on their own, just send them my way. I know you're bombarded. Just send them my way. I'm happy to help, so that you're not having to waste your time helping these clients that don't know they can go to their payroll provider, don't know they can go to their accountant, or that they can get other assistance besides directly just from their banker. So that's one thing you can do is really, send a thank you note, check in, ask personally how the banker's doing, because they're also going through a change in their life with this pandemic, not just their work, but their life, just like all of us are. So I think showing that human side, and everyone appreciates that. I haven't had a single person go, "Why are you asking me about how I'm doing?" I've never had anybody ever say that. They all appreciate that. So
well, I think that's just a good general coverage across the board, right? I mean, at first it was, everybody was just being a bunch of, a-holes to the people at the grocery store, right? I mean, it was like, you won't let me have 57,000 toilet paper? What's wrong with you? I mean, the hard part about this whole thing is this is new for a whole lot of people. I mean, like I talked to my grandfather who's 89 years old, and he's just like, man, no big deal. Like he's been through, all these different world pandemics and different things from that standpoint in his life. And he's just like, it's just another day, no big deal. But for a lot of people in our generations, this is new. I mean, this is relatively a new impact, whether you were alive in, the 80s or 90s or even 2000s and things that we've gone through. And so, to Michael's comment, I think we all have to kind of recognize with that too is, I mean, we're all human in some way, shape, or form. These other people you're talking to have families as well. Some of the reasons why things are going up, as frustrated as they are, is liquidity issues or, setting boundaries for what they can and can't do. Now, that being said, there are certain organizations that should be doing more. Like, I'm not giving a free pass to people who are, and who are not advocating for their customers in best way possible, but looking at that from the standpoint, and I use Wells Fargo as an example of that because I think they're the ones that have been getting the largest, virtual beating over the last couple of weeks and making their stance that we're only doing 10 billion. That's the cap we're going to process with. Wells Fargo's been around for a really long time, has a lot of really good customer base, has a lot of really good businesses, but to set that expectation, you're just turning away from your customers at that point in time. Like, you just are. Now, It's not, and I just read something that was kind of funny on Twitter where someone said, you have the cash on hand or the liquidity or the ability to be able to pay off the entire stimulus package twofold, and yet you're walking away at the $10 billion mark. And so there's moments and ideas and situations where we can be frustrated and anxious, but it's also a great point to Michael's comment there's some humanity we have to recognize in this process as well, and respecting everybody through that space. And especially with all the 77,000 different versions of documentation that banks are asking for, there's a little bit of humanity. Me and Jacob had a little bit of a spat over the weekend regarding this, just because there's so many opinions that have gone out on it, and I kind of threw my hands in the air and said, I'm done. But he was very kind in balancing that out. But it's the honest truth. There's a lot of difficulty going on with this, and I think we just all have to be patient and supporting each other and getting really clear with what your bank wants in the process. Not just throwing a bunch of things and hoping they're going to take care of it for you. You actually want to make sure 100% you're getting exactly what they're looking for, because that's what's going to best help you work through the application process. Whether you have an accountant or whether you don't, make sure that you have that perfect list, of what needs to be done and what needs to be assigned to go through that.
So today, not using any, I had to fill out I told you with a client, 3 different applications. We went straight from their annual payroll summary reports, and just to make me feel better, because I know that somebody's going to want to check, just make sure everything ties to the W-2s. If you're adding up people's, that's the simplest way to know you've reported the right number. If you're going on calendar year 2019, is the total amount of income before any caps or, deductions for caps, does it agree to the W-2s or that W-3 that you file? That's step one. The next thing is, they were talking about, what is it, average number of employees for all of the year? FTEs, whatever. Every application that I saw with my own eyes this morning, they asked, how many employees did you have on February 15th? So there's some clarification there. I think we're all we've all been so wound up about what's it going to be? What's it going to be? I want to be ready to go. I want to be able to help the most people. We all can now take a deep breath and say, all right, it's in the bank's hands. And now we help our clients get what their bank wants. This morning, I was real hopeful that a fintech was going to come through and help one of my bigger clients. We had messages into a big box bank who we have a business relationship with, and a fintech that's jumped in the game who we have a relationship with. And it made us feel better because we could actually talk to a rep from the fintech. But you know, their portal didn't launch when they thought it was going to around lunchtime. And as Dan was talking, I just got a message that it's still further delayed. So everybody's trying the best they can. I would so much rather have the portal delayed and have it be right than somebody have taken my information and now I see something else. I'm like, oh, we submitted the wrong thing, you know? If we'll know when it's time, because I feel like the floodgates will open.
So, Michael, I was change the topic here a little bit on EIDL loans once again, and that communication you got back from the SBA, or Amy, I know you saw some of this as well. Is there a clarification around getting an EIDL loan and a PPP loan at the same time? I've seen some communication from the SBA that makes that look like you probably can, as long as the EIDL loan is not used for payroll. Mm-hmm. There was some weird language in what I saw that the EIDL loan needs to be reduced by your payroll cost if you're getting a PPP loan as well. But I guess what that means to me is if they're going to do that, they're going to need to collect a lot more information before they issue you an actual EIDL loan than what was on the initial application. So I was just curious what you guys may have heard from the SBA or from other sources in regard to that.
So there is clarity on it. They will take into consideration other loans you had secured or have access to during this time period. So they are going to continue to take into consideration if you have an empty line of credit that you can access, if you have other capital you can access. They are going to they're also going to make you certify the information that you provide. And so there is, even though you did the online process, there is information that the SBA is going to want from you to support the numbers that you provided, first of all, on the application online, and also almost looks like support the fact that you don't have other options. So that's different for this. But what's unique about it is, again, it's not tied to a loan max of payroll. It's a $2 million max. And then it's a long-term, a 10-year, or not a 10-year, up to 30-year loan period with a low interest rate. So that's a little unique in that if you're the kind of business that doesn't have a lot of payroll, but you have a lot of other expenses, this could be a great option for you. Or if you have a lot of independent contractors and you don't have a lot of payroll, but you still have a lot of those expenses and you were impacted, this could be a great option for you. It seems like you'll have an easier time getting this option than you would a regular SBA loan. If you've been turned down in the past, you might be able to get this option, especially if you don't have high payroll costs to support the PPP loan max.
And for the advance piece of that, will they need to provide all that information before the advance is given, or not? Or do we know that yet?
It doesn't look like that's the case. It looks like the advance is given before any of this, because that's the only way you'd be able to turn down the loan offer and keep the advance as a non-repayment. So they're giving you the advance. They're just behind in the process. So they're just way behind because of the amount of people, and they probably just weren't ready for the floodgates of people that were going to apply for it. And again, you're not going to be considered for that advance unless you did an application this past week only, right? So after 3:30, you had to have filled it out. And I bet you a lot of people did not go back and realize they had to fill it out to even request that advance. So, they're dealing with that backlog at the SBA, along with now the PPP loan backlog from banks.
Right.
One of the interesting
We had
things,
I'm sorry, I thought you were done.
Amy, go ahead.
We have a mutual colleague who actually spoke with a rep at the SBA to get clarification on that 10K, because she too had heard that it was $1,000 per employee up to 10,000. She said that the agent couldn't confirm the calculation, but it is based on the number of employees, not necessarily 1,000 per employee. SBA rep said no answer was definitively given on when the grants would be issued, much like, this is kind of obvious, but much longer now than the 7 to 10 business days as originally planned. So anyways.
Yeah. So over the weekend, we saw several payroll providers, and could probably be our final topic. We saw several payroll providers and PEOs come out with their own reports. Some of the largest payroll providers came out with their own reports that allowed you to provide the necessary information related to the PPP loan straight from the payroll reports. Most of us who serve clients were doing the calculations on our own by using payroll reports, but most of these providers created a PPP loan specific payroll report with disclaimers on it, saying that it was up to the client ultimately to calculate the right number, and that this was just information only based on what they interpreted from the guidance of the SBA. And so we had Gusto, we had ADP, and I saw over the weekend and came out this morning. JustWorks have theirs. They're a PEO. A lot of people had asked me who are on PEOs, a lot of clients as well as others, what if we're on PEO, our bank's asking for a 941, what do we do? And so what I've told clients is reach out to your PEO, request a letter from the PEO on the PEO's letterhead that says explicitly the relationship they have with you, in that your employees' taxes are reported on their 941, the PEO, and that the report they can provide is going to be a payroll report in their system. So attach that letter, attach the payroll reports, and then if the bank, and just for safety for the bank, attach your bank statements. Although the bank should have those, your bank statements. That the bank statements was one of the last items you could provide if you did not have access to 941s. It was actually really clear on the SBA guidance that bank statements would suffice as documentation. So if your PEO or other kind of provider doesn't have a report and you can't get access to those, and you can't get access to 941 because you use a PEO, you can use bank statements. I don't know if there's any other thoughts around that, any updates around that you guys have seen.
Yeah, that I think the biggest thing for me with that one is, again, to that same tone, some of our clients who've had, that work with banks or are working with their bank still want to see some detail. And I think that's the part that becomes really difficult to set that expectation. But to that point, have as much as you can prepared in that same space. I mean, if the PEO is allowing you for some sort of export or report, great. That gives you some great functionality there, some great simplicity, hopefully. I would say, and I think this is just a lesson learned for a lot of people on the same process too, which is make sure you have and hold on to your documentation, right? Keep your bills, keep your records of what's going on, because I've also run into clients who are now going back and, requesting from prior payroll companies or bank accounts that closed for statements or documentation. And it's been hell for them to try to figure that out. And so that becomes even more, especially with PEOs in that space where it's more of an invoice than it is a a hard documentation or something filed with the IRS. From that standpoint, you can find other workarounds to make sure that you have and stay on top of gathering all that information as quickly as possible, or keeping record of it. Kind of a little bit too late from that standpoint, but hopefully lesson learned for everybody too.
Yeah. So yeah, if you change payroll providers mid-year, or you change from a payroll provider to a PEO, or a PEO to payroll provider, you're going to have to do some extra work and contact and reach out to those past service providers if you did not get a copy of the 941 or download payroll reports for your records. We have Will Lopez just joined us here with Gusto.
Hey.
And, he has been basically been awake for about 3 straight weeks. And it's burning behind him right now.
This is fine. This is fine.
You're fireproof here. You're fireproof.
So, Will, the theme of today's show is no good deed goes unpunished. So come on in and join the party.
Oh gosh. When you go out there and you try to help people, you get burned along the way.
Yes.
Yeah.
So
I love that backdrop. That's great.
So Will, I'd love to hear, we'll just give you an opportunity to kind of share. Gusto was one of the first payroll providers to come out and provide guidance and updated that guidance, however frustrating that was, updated the guidance as it's changed. And we all are frustrated as accountants because it's changed so much. Why don't you just tell a little bit for those who are completely just woke up today and realize there's even a PPP loan out there to apply for, don't know where they've been as a small business owner. Maybe they shouldn't own a business, but maybe you can provide some updates on what has Gusto done? What have you guys done? How are you helping small business owners, your clients, the community? By the way, not charging for any of it, I mind you. So what are you guys doing, and how do people access those resources?
Yeah, well, I appreciate all the feedback. I know we're kind of taking hits on the chin as we go. But yeah, to your point, I mean, first one out the gate, and it seems like every Friday we seem to have something big happen every Friday. So we're trying to continue the every Friday launch of something big. So we have something really cool lined up for accountants around COVID-19 and other ecosystem partners that are building solutions that'll help support accountants to really do 2 things. 1, practice from home, and then 2, actually help their clients within COVID-19, right? And so just got off a round of phone calls on that and shooting for a Friday launch of some really cool stuff that happened inside Gusto's dashboard. But yeah, the latest stuff is just building out the PPP report, right? So it was a blitz at the end of last week to actually provide not just SMBs, but accountants real powerhouse tools around the PPP stuff. So the PPP report is inside the client's dashboard, so clients can use it to help them fill out that application. And then we had a few iterations along the way to try to surface everything that they needed, including their corporate information, which was also a pain of frustration that we were seeing SMBs getting themselves into, because they were like, where do I go for that? Go to tax return? Can Gusto do that? So we already have that data. Let's just make it easy for them. And that's kind of like what you're not seeing, I think, with the other providers, which is they're not queuing up that stuff that they already have. And they're just making people run in all sorts of directions. The account tool is now the bulk feature tool. So amazing. Our partner team is just killing it on our side. We created this PPP bulk download feature where you have all your clients like listed up, and then you select what period of time you need, and then hit the create report. And then within 30 minutes, we send you what you need. Just got off with Nora, who's our head of partner engineering, and we're going to try to create a better filtering system to actually collapse that, so you don't have to go one by one. So we're kind of building the infrastructure, and then the engine's just going to spin faster on innovation on that side. And that's kind of like the latest and greatest. It's been a whirlwind since last Wednesday and over the weekend as well. So I'm sure everybody's just like, what is happening? We got no guidance. What's going on?
And Will, how are you? You're curating? It looks like you guys are curating a lender list. Is that a crowdsourced list from Gusto employees or from Gusto customers? Like, how are you guys curating that list? You
mean the list of people who are accepting applications versus not?
Yeah.
Okay, so that was an initiative I was running with a few team members on our side. So because Gusto is capturing a lot of data, what we're trying to do is take all this amazing data that we have in-house and trying to like get it out into the wild. So we were actually keeping track internally of a list of lenders who have loan application windows open versus closed for our own purposes, because we were getting customers calling in saying, I'm trying to file an application for Chase or Bank of America or BoFi or whatever, and we're having trouble. And so we needed a central location to pull from a customer service standpoint. And then I reached out to our partner engineering and said, hey, can we do the same thing that we did for the state and local filtering of relief, loan and financial relief? Same thing with that list. So now we're going to try to curate that list where we're trying to keep it evergreen. We have a team all over it, and we're trying to surface that list so that partners can really treat that COVID command center as an actual command center to say, okay, here's all the resources, and then here's who's accepting applications in real time versus not. And that's what we've done with it. So it's nothing that we've partnered with. It was actually our own internal way of figuring out who's doing what. And then we just shot it over to the engineers and said, let's get this up in the app.
So I noticed last night I was in a client's file and they happened to use Chase, and I was pulling their reports, and there was even a link that within that specific file that said, hey, we know you bank with Chase, obviously, because that's where we pull your payroll money from. Here's a link to go to their site so you can get some more information. I mean, it's that customized, and that was nice to see as well.
Yeah.
Yeah, the one thing I wanted to add to that too is the same thing on the state level. I know one of the big things that you guys have brought forward, and I was actually going through this morning with some of my clients and just kind of glancing through it. You know, some states are offering different lending functions or different loan, availabilities or tax compliance benefits that go along with it as well. And I think all those are super crucial to stay on top of through this process. I mean, there's not just federal stimulus functions out there. There's also some state regulations and guidance that we need to stay on top of as well. That becomes really important to make sure that as we're taking care of our clients and tracking them, that we're doing it the best we can. I guess lucky for me, but not lucky for me, Utah doesn't have a whole lot going on from that standpoint. So there's not a whole lot of extra things for a majority, a handful of our clients to be tracking. But I definitely know there's some other states that are doing a really good job staying on top of that and keeping things moving forward.
That's funny because I remember selecting Utah on like that drop down, like, they got like 4 things. And then you select California, and it's like,
it's
a never ending list. It's just constant.
Same thing for Ohio. I don't know if we're lucky or we should be sad, right? There's just not much there. Will, on the lending side, are you guys going to try to update those for lenders that cap out and start removing them? Like we see Wells Fargo today said, we can't process anymore. There was a rumor Chase and some of the others were tapping out at 35 billion, and they said we're not lending any more than 35 billion. Don't know how closer to those limits, but as we start seeing some of those, I'll say the guys that a lot of us turn to for SBA lending fall off the plate. Are you guys going to work to try to update your list and notate that? Because I don't think there's that in there now.
Yeah. So yes, we will keep the list up to date, because from a customer service standpoint, we need to understand who's doing what, who's capping out. It doesn't stop us from allowing people that bank with them to download from their reports, right? So it just means that lender is not accepting applications.
Yeah, and I just think that's huge, because that's going to be the hard part for a lot of us to keep track of who's capped out, right? Like I know, you can go to Chase. Well, no, they capped out yesterday.
Yeah, so we are thinking through as far as thinking about best practices and how to help both accountants and their clients think through alternative sources besides the one bank that they may bank with that has tapped out. So what does that experience look like in app? Could it be a simple alert that says, hey, looks like you bank with Wells Fargo and they're tapped out. Your next best option is XYZ, right? And but I personally, I'm trying to be mindful of that, because while the accountant is the one that's in the position of being a trusted the advisor, not Gusto, and those accountants that trust us to be their advisor. So it's kind of like the flywheel effect. So we're trying to think through like how do we like properly not circumvent your recommendations, but with our own recommendations. If anything,
Thank you for considering that.
Yeah,
I'll say thank you right off the bat.
yeah, if anything, and I don't even know if this is possible, but it would be cool, is to potentially surface to the partner dashboard the clients that may bank with Wells Fargo that says these 5 clients have been, are banking with someone who's tapped out on the PPP. So just FYI. I don't know what kind of coding or development goes into that, but that's how we're kind of thinking creatively about it, where we're not going to circumvent your advice, but we're going to try to augment what you do.
Thank you.
Was this thing supposed to start at 5?
I was just gonna say, hey Maxie, welcome to the party.
Hey Chris. Any updates from you today, Chris, on PPP?
Yeah, you know me.
PPP, yeah, you.
He didn't get a curtain over the weekend.
No, it just was cloudy all weekend, and that was the benefit. So now I'm just like, it's like I'm coming down from the heavens. Yeah, no.
All right. Well, I've definitely appreciated, I think many have, the proactiveness of Gusto. Gusto has truly showed itself to be a partner to accounting professionals and customers, and willing to make mistakes in the process and get our feedback, which is great. So I've definitely really appreciated that. Dan, did you have some thoughts?
I think just for me, I know we're kind of tying up and wrapping up for the hour, I guess, but this is one of those moments and times to not give up. I think that there's a lot of people who are really discouraged right now with their banks not moving forward, not progressing the way that they need. And I think to Michael's comment, Gusto has been on top of the communication, on top of providing resources, on top of trying to really create some functionality that's been really helpful to a lot of people. And I think that even as small business owners or accountants, we have to take that into consideration as we look at banking partners or look at solutions for where we're at right now. A lot of people in standard positions wouldn't want to go to some sort of fintech or things like that to try to help create or work through a process like this or to kind of develop. But the reality is a lot of those businesses are a lot younger. They're a lot more nimble. They don't have antiquated softwares and tools that have been around forever to work through, that they can have the flexibility that can maneuver and shift. And I think that's actually something really important to consider through this process. If you're running into that wall where your bank is no longer accepting or moving through it, not being afraid of looking at an alternative. That being said, I did have an email from a client come over this morning that we talked about this on Friday, having scammers come through. Got to watch that as much as possible right now. There's a lot of people out there doing shady things, asking you to click on links that don't really make a whole lot of sense from some random thing. But definitely, I think there's a lot of really good that's people are trying to do out there as well, and making sure that customers are taken care of, or hopefully future customers are being taken care of.
Yeah, we wrote a piece. I was going to say we wrote a piece actually from our Gusto risk and security team. Our own internal team wrote a piece on how to protect your business against COVID-19 scams and attacks, and it's actually really good. So some of the head people from on our security side internally decided to write a piece for everyone that says, hey, this is what we're doing as it relates to it. And we have over 100,000 SMBs on this, so we got to be on top of our game, but this is what you should consider.
There's a question that came in. And Jacob, maybe you can answer this one because you answer the right questions with the right answers. What about PPP and full-time versus part-time employees? Should you make manual calculations for the 2020 full-time instead of the Gusto PPP for all? So I guess the overall question is related to full-time versus part-time, and is the intent to report all employees or the FTEs, like full-time equivalents? Yeah.
So if you're talking about the application, it truly only says number of employees. So they want the employee count. And actually, to Amy's point earlier, many banks are asking for that employee count as of 315, which ties not to any payroll number you're giving them at all. They want that count as of 315, which ties to nothing else.
Well, it ties to the forgiveness part, right?
But no, it doesn't, because if you go back to the forgiveness calculation, the forgiveness calculation is average full-time employee for the period of January and February,
Right.
or for a period last year. There's two choices you can pick there. 315 full-time equivalent is never used in the forgiveness calculation, but I'm assuming they want to use it as a ballpark from the forgiveness calculation side. So nowhere in the application are they asking for a full-time equivalent calculation that's actually going to apply in the forgiveness piece. Because there was two options from the forgiveness piece of when you could look at your full-time equivalent from. So I'm assuming they're putting it out there as a placeholder, and some banks may want to look at that when you get down to the forgiveness piece, but you actually have an option of which period to pick from when it comes to forgiveness and full-time equivalents. So I don't think they can tie you to that at all. So frankly, I don't think it really matters what you put on the application on the employee count. Just being what, right?
Because the forgiveness application is going to have all the information anyways. You're going to say, this was the jobs I had at a certain period. Here's the jobs I have now at a certain period. And a calculation is going to commence. Some magical calculation.
Let's be really careful with this, because we didn't give our guidance at the start of the session today.
Yeah.
This is all of our opinions.
Yes.
Nothing is set in stone.
This is not
Because
legal or tax advice at all.
We don't know
Right.
100% on that. That's the difficult part of it, because the application is so very vague
Right.
with what's going on there and what you calculate and when you calculate what period. We hope materially it makes sense, but I guess in 8 weeks, when people start calculating this again, or their lenders are starting to ask for this information, we're going to really know what's expected
Yeah,
from that
because
standpoint.
I talked to the bank today, and they're like, there's no forgiveness. I mean, there's no guidance on the forgiveness calculation. There's none.
Yeah.
We all just went, what?
Just go with-
Wait, no, there's no guidance on that forgiveness. So as of today, to give somebody guidance on how that's going to impact their forgiveness, how do you know, right? Like,
Yeah.
I mean, you can go read the bill as much as you want. There is not really much guidance in the interim final rule on forgiveness. The bill, we've seen very much so in the interim final rule, interpreted things completely different than I'll say any logical person reading the bill would have interpreted them. So when you see that variance, that says there's a lot of variance probably that's going to be in play on the forgiveness thing. I'm also going to say, I know there's lobbying work being done right now to change some of that forgiveness calculation. I know active lobbying being done right now to change that bill. So when I say that, everything we say on forgiveness is subject to change multiple times between now and when you calculate it.
It changed since the beginning of your sentence to the end of your sentence. So
Yeah, I feel like this is one of the areas where I'm really struggling right now, is trying to decide for small clients that don't have a ton of payroll. Should they take the EIDL or should they take the PPP? And so right now I'm trying to run numbers for FTEs in the periods that they're referencing to figure out, well, what is their forgiveness percentages right now? And like, I will say that is probably right now the single most manual thing that I'm doing, is trying to figure out what those FTEs are for those periods and ballpark where we're looking like it's going to be at the end of this.
And I personally commend you for that, because I think in the midst of all this craziness where everybody's just diving for the pile of cash, right? I think from an accountant perspective, I think it's extremely important to pull back just a little bit and do some heavy, deep analysis and forecasting around this, because that's, the whole PPP, whether to add employer taxes or not, or, what's the actual methodology behind this madness. Everybody, it's almost like that. What's his name from Jurassic Park, where he's like, everybody was so preoccupied as whether or not they could, they didn't stop to think whether or not they should. And so you need to be asking for what you need, and you should, at least as a professional, I would not be positioning clients in a place where I would get them in a position of having a potential huge liability on their hands if later on it landed on some money that they spent that they had to pay back, right? And so, but that just all goes into, are we doing analysis? Are we doing forecasting? Are we modeling? Are we trying to utilize those resources that we currently have and the skill sets that we currently have, other than just the analysis of the application, right? In conjunction with the holistic picture of what they're trying to do. And in this whole craziness, I think we've lost that as we all die for the toilet paper.
Actually, I think we've done a really good job on it here, in that I think every session we've said, originally we thought 90% of people should be doing this. I think Chris coined the term. On Monday, we were down to 30% of people should be going PPP. And I think on last Friday, we're like, we're not even sure if it's 30 anymore, right? But I do agree there completely. Like, I don't think there's enough in the community as a whole. There's not enough analysis being done of our other options. And instead, everybody's like, oh, you should go get PPP. And I don't think we're in agreement with that in this community, in this group here, luckily.
Yeah. I think to that same point, I mean, that reminder needs to be very, very clear. It's 1% for 2 years. And I know a lot of people look at that and say, oh, it's 1%, no big deal. That's a small amount of interest, yada, 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 2 years. And we have a 6 month for it still needs to be paid back. It's still 1% at 2 years of what's not forgiven. And because there's not a lot of really good guidance and clear guidance on what portions or what things they're going to consider through that process, other than the assumption is anything that's over the 8 weeks with the calculation of FTEs increasing or staying about the same. I mean, that's really the framework that has to be considered, not only from accountants, but from each individual small business owner as they're going through this process. They have to make that decision, which makes the most sense for them. And I know we've all been very clear in saying, treat it as if it is just a loan and you're never going to you're always going to have to pay every penny of that back. But that is something oftentimes I think is swayed, with how you see it on Twitter, with, things coming from government or from the news. It says, well, it's available. Take it. And there's going to be a lot of people who are left with a pile in their hand that they're going to have to try to figure out how to make, best solution with.
And a 2-year repayment term isn't very long. Those are going to be some steep payments for some people.
Yeah.
That are going to be really, really painful.
Yeah. And you need to be forecasting that,
Yeah.
I mean, you need to think about, like, when's revenue going to get back to normal, right? What's that horizon? You talk about, flattening the curve. Oh my gosh, try to do that on a revenue model. That's why I really appreciate Giraffe, because they've been like one of the first few forecasting and financial modeling apps out there that actually put some really deep thought on, like, creating a forecasting model based on impact of COVID-19, right? So, like, people operation, like people planning, modeling, Giraffe has figured it out and can actually do spot on modeling around COVID-19 impact on your own headcount. So what happens if 40% of your workforce is sick? What happens is, what happens if, you stay at home and revenues decrease by 30% for the next 4 months because of everything that's going on. So they have done some pretty stellar stuff that actually is now being driven in app, which is why I'm excited personally for our Friday announcement with, what we're trying to do with Account Tools and other ecosystem partners that are trying to help accountants figure out, like, what's the next step to all this, rather than just filling out applications.
Well, it sounds like, Michael, you need to make sure we get some time with Will on Friday so we can understand what cool features and tools are rolling out. And we're going to change our session to the Gusto rollout session. So every day we expect some new updates from Will on what they're doing.
Listen, if it's every day, man, you guys are going to kill me.
I just noticed that Will is a little more jumpier today than he normally is.
It's Monday. Catch me on Friday.
Yeah.
He stole some Red Bull from the engineers.
Yeah. Well, I'm going to go ahead and wrap this up. Thank you, everybody, for watching, and we're looking forward to seeing you tomorrow, everybody.
All right. Thanks for having me.